Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Stewart Muir, Executive Director of the ResourceWorks Society. His website, resourceworks.com. You can find him on Twitter at SJMuir. Welcome back to the show, Stewart.
Hey, thanks, Jim.
Stewart, Canadians are being warned we're going to see sky-high fuel prices for natural gas and gasoline over the winter, but compared to Europe, our prices are nothing. What's going on here on the energy front, and could Canada play a role in making sure that people have reasonable energy prices?
Yeah, that's a really good question. Very timely right now, Jim. You know, we haven't been directly impacted in Canada by what is clearly a global energy crisis. Not yet. I mean, it might feel like it's costing a little more to fill the tank. I had to put some 91 in my car the other day because it calls for that. It was like $1.84, I think, a liter. Yeah, that's a bit painful, but it's, you know, not something we've not seen before. Whereas in Europe, they're just seeing, you know, this crunch happening that I'm sure everyone's aware of the basics on that. So we don't need to dwell on that today. But I think, you know, some of the implications of these trends, really interesting. I mean, sure, we could be getting that in North America. Right now, we're a bit of a fortress, the USA and Canada together in terms of our energy systems being so closely linked. And much as we do, I think with some righteousness, complain from time to time about the imbalance of that energy relationship with the U.S., you know, them blocking our pipelines and stuff like that. They're also really good customers for what we produce, and they flow a lot of revenue and ultimately the ability to pay for social services and things through government revenues back to Canada. So, you know, our cousins down south are, you know, they're more than frenemies, they're friends, but we have issues. We're in this fortress, North America, and we're insulated from what's happening. You look at Beirut, the lights are out. India, they're shuttering industrial production. It's not just Europe, it's not just the UK where it has, you know, first surfaced. It's happening all over the place. So it's a real crisis. You know, one of the questions is whether what's happening there is a feature or a bug of the so-called energy transition that's going on. That is to say, the move towards more renewables in the energy mix, which Europe has been probably globally a front runner in. And that has meant they've been the first ones to run front first into the spinning blades of energy reality. And that reality is that renewables, which I strongly support, I believe we need the all of the above solution to our energy future. We need to have reliable, affordable, clean, renewable sources. We need energy sources of all kinds. We need nuclear. We need oil and gas. We need natural gas and LNG. And we also need wind and solar. I mean, hey, if it works, use it, right? Would be foolish not to. But you know, the reality is that a lot of these energy alternatives or emerging energy sources prove when it comes to situations like weeks of low wind conditions in Northern Europe, which has invested very, very heavily in wind, and the wind's not there. What do? Well, they didn't think about that, because had they thought about it, they wouldn't be scrambling and shut down production right now. They wouldn't be kind of kissing the ring of Vladimir Putin and Russia right now to get gas from Russia. It would be a very different situation. So what's happening now is not planned. It's not planned in the sense of energy access. But you know what? It is planned in the sense of making energy more expensive, because that's the whole idea of this energy transition ethos, which is that the only way to encourage renewables is to make the reliable categories, or the fossil fuels, and nuclear, too expensive. So people have no choice but to use them. And that's what carbon taxes are meant to do. They're meant to push you to other alternatives. The problem is if there's no alternatives that you're getting pushed to, you have a problem. And that's what's been happening in Europe. There's a lot of nuance to it. And I think we should be just a little careful on the black and white situation, characterizations. But, that is really a large part of what's happening, Jim.
The International Energy Association said not enough investment is being made in exploring for future oil and gas, and that could lead to shortages and sky-high prices. And I noticed that the second largest pension fund in Canada, out of Quebec, has decided not to invest in oil and gas anymore. Is this a dangerous move on the part of these people who want to see greener energy, but the investment isn't being made to bridge it over?
Yeah, I think they've been almost too successful. There was a columnist, Thomas Friedman, writing in the New York Times the other day, who came up with a great new characterization of this. You've got your nice greens and you've got your mean greens. And Tom Friedman, he says he's a mean green. And when he said what a mean green is, I said, well, I'm a mean green too, because a mean green is someone who is an all of the above. We need to make sure we've got the oil and gas and the nuclear there and the coal if we need it to get us through a transformation of the energy system to the point where the new technologies that we need that are emerging, that are there because climate change is real, are going to, be sufficiently matured that we can make that transition successfully. And right now, clearly we can't. So being too successful means that I think politicians have accepted the propositions from the renewables advocates to say you must do this. And there's a lot of, shouting and the finger pointing and moral shaming going on. If policymakers haven't done something, they'll get screamed at that they're climate change deniers and that kind of thing, which isn't true. I mean, there may be climate change deniers out there, but it's just bandying these terms around. It only worsens things when policies are pursued that aren't matched by the state of the engineering to deliver on these alternatives. And you've seen that all over the place. We've certainly seen it in Canada. Ontario went through that. They've sort of pulled out through the other end of it, I think, to a large point, thanks to nuclear and natural gas. In the West, in BC, we've got a large amount of hydro. In Alberta, Saskatchewan, they're very heavily reliant on natural gas. They also have coal there. So having natural gas has been the bridge fuel to lower emissions in these places. In the United States, it's only because of natural gas that the country was able to dramatically get off its reliance on coal, thus lowering emissions. And it's not because of solar panels in the States that they have done that. It's because of gas. We have abundant gas in Canada. It can and should be part of a global energy transition. Right now we're building an LNG project in Kitimat here in BC on the coast. And I was just looking at the prices. I'm not saying these prices will last, but right now a cargo of LNG, like a shipload of LNG that lands in a port today, while we're talking, Jim, will fetch $110 million. That's based on a standard cargo size. And if you look at LNG Canada, if that was running now, if it had not faced years of opposition, if the Petronas LNG had been cleared and built, that might even be running now, would be getting these revenues. $110 million of cargo. Well, that's $48 billion. B like Bob, $1 billion a year in revenue just from LNG Canada. When things come back to earth, it'll still be, if it's half that, say, it'll be, $25 billion, $24 billion Canadian per year from that one project in LNG. So it's an enormous driver. It's part of the clean energy transition in Asia because they're getting off coal. So, why wouldn't we want to be part of that? Think of all the benefits created for Canadians when we have that.
The U.S. kind of heckle and heckle. What's the other guy? And Hyde. Jekyll and Hyde.
Yeah.
Yes, the U.S. Jekyll and Hyde thing where President Biden cancels the XL pipeline and then just months later is urging OPEC and Russia to produce more natural gas and petroleum. What's wrong with Canadian oil and gas? Aren't we a more reliable source? Aren't we a greener source? Don't we pay more attention to human rights and protecting the environment than they do in Saudi Arabia or Russia?
When you're dealing with the Americans and your name is Canada, there's no reward for environmental performance. The reward goes to Putin. Shortly after canceling our pipeline, which is going to move the only oil supply in the world that's actually improving in its environmental attributes is Canadian oil. It's not perfect. I'm not arguing that it's perfect, but it's the only one where the emissions intensity is being reduced. All the others are staying the same. And Biden, the so-called environmentalist, cancels a pipeline to get that to market, and then he turns around and he approves Putin's Nord Stream 2 pipeline from Russia to Northern Europe to get gas there. He says, hey, go for it. So I don't know. Is it a better idea to not be a friend of the U.S.? That's how, that's when they respect you and start doing things for you. I don't think that's what our neighbor relationship with the U.S. should be, but, it's tempting to think about alternative scenarios.
We'll have more with Stewart Muir right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Stewart Muir. Stewart, are there any opportunities here for the average investor with the world looking at an energy crunch?
Yeah, well, as we were talking before, it's obvious that there has been this divestment trend. Pension funds and other investors are saying, we're going to drop fossil fuels because fossil fuels are bad, and they're just dropping those investments. What's happened because of that is that a huge opportunity has been created for other investors. I think the biggest beneficiaries so far have been private equity, which is, a bit of a mysterious world. It's opaque. We don't know what's going on inside private equity companies. That's the whole point of them. They do what they want to do. And what they want to do right now, there's emerging evidence and new reports out this week, is they are just pouring into oil and gas. They're picking up the assets that have been shed by companies, often publicly traded companies, and they're doing the same things that would have been done otherwise, except they're shielded from accountability and transparency. If I was an environmentalist who was advocating for divestment, I was realistic, I would be looking at the situation and saying to myself, so my advocacy has created a situation where there's less accountability and more environmental harm because people have done the things that I told them to do. What? How could that be a good outcome from that? Why not be a pragmatic environmentalist, or as Thomas Friedman puts it, a mean green, and be more practical? Invest in getting to the technologies of renewable energy that work. Until that time, make sure you've got businesses in that. Now, the question here, Jim, is what are the investments for the average, ma and pa investor? I think it's a really good question because there are opportunities out there. I'm not going to name any companies or make any investment advice. I don't do that. But you look at sectors, you look at the Canadian sector, it's been hit really hard. I think there's a lot of mid-sized companies. If you follow some of the commentators in energy Twitter out of Calgary, they're watching, a large number of these companies that have been just very slowly been reinvesting. They're not actually investing into infrastructure. They're paying out to their investors. They're paying big dividends because they're seeing that it's difficult to make investments into drilling or any infrastructure for energy. So they're just saying, we're going to enjoy the high prices and we're going to reward our investors. So if you want to get into dividends, that's an area. I think we've seen a surge of value of share price escalation for a lot of Canadian companies. A question I would have, and I don't have the answer, is there any upside left in that for people to get into it now? You don't want to be the last one to the party because, you're the one left cleaning it up. So, again, I'm not suggesting there's particular timing on this, but, do check it out. Do see who's advising, what some of the better strategies are to take advantage of it, because I don't think it's going to go away. I mean, it's been a very multi-year shift to get to the point where we've got this energy crisis. And it will be a multi-year shift to get away from it. One of the beautiful things for the Canadian oil and gas sector, particularly the Western Sedimentary Basin, which contains the oil sands as well as all the gas in those gas plays in the northeast of BC and in Alberta and Saskatchewan, the beauty is that it's a very well-known shale resource. It's not, let's drill a hole and see what comes up. It's not like the Beverly Hillbillies. And that means that the type of industrial exploitation of the oil resource in particular in the oil sands is very orderly. Once the billions of dollars needed for a new oil sands mine or a SAGD operation, steam-assisted gravity drainage, are made, it just sits there and produces reliably for decades. In contrast to just drilling all the time. And that's what's happened in the U.S. The shale explosion has collapsed, and there's not going to be investment in new drilling there because investors just aren't ready to make those investments. So for those who've already made the investment, like Canadians have in the oil sands, those mines, those properties will just continue to become more optimized. They'll become environmentally improved over time, and they will just steadily, quietly create benefits for Canadians when they get that to market. And so I think there's a very strong argument, and again, I'm not making specific recommendations. I don't do that, to recognize the incredible foresight that was exercised in politics and industry in Canada and investment to make those things happen. They've had their ups and downs in terms of popularity, but right now they're just quietly rocking it for Canada.
Are there opportunities here for First Nations communities to take part in this, to make sure that we're not energy deficient and they can get some major league benefits from it? Well,
the contrast, the fact that, we can be out there drilling hundreds of wells, we can have people in cities enjoying a great lifestyle, but we have this ongoing water crisis, access to clean drinking water on First Nations reserves and communities is a national travesty. We need to solve it. Imagine if through having something like the LNG project in Kitimat that's going to generate $48 billion a year in revenues for Canada if we had today's prices, imagine daycare, imagine, clean water, imagine all of the other things we want in cities. We want to have an alternative to getting in your car and going to work. You want to jump in a train. Well, maybe you want to stay home, but if you need to get somewhere, transit needs to be built. It costs money. It costs a lot of money to build infrastructure. We can create that money and be part of the global energy transition at the same time. And First Nations who are located in rural Canada, most of the traditional territories of First Nations are in rural Canada, although, very large number of Indigenous individuals actually live in cities, because that's where the economic action is. But I meet so many First Nations who want to find a reason for their members to come back home to the traditional territory so they can raise their children there and preserve the language. And language is culture, so preserve the culture and stay with the elders. That's what a lot of First Nations leaders I talk to are thinking about all the time, how to do that. And the best way they can do that, if you're, somewhere in the mountains west of Prince George, say, or anywhere, that a project wants to build something in, it's not just about handouts. There's a phase in the past, I think, where, a company would say, we're going to build something here, we'll give you this. Great. It could be a very good deal. But I think First Nations have indicated a great interest in wanting to be more meaningfully involved, having more direct employment, being business partners in infrastructure investment and anything to support that. So, in my opinion, and I say that, now going into the third year of an Indigenous Partnerships event that we've organized at ResourceWorks, I say that with some knowledge of what these trends are, and I think it's actually really exciting to see almost a surge of interest across Canada. Part of it is awareness on a broad scale of reconciliation, and also the residential school travesty that has been unfolding. I think everyone wants in their hearts to see this corrected, acknowledged, and move forward in a way where everyone benefits. So we have the tools to do that. We also have the ability to not use those tools, which is kind of a frightening thing.
There's this perception that First Nations are against natural resource development and sustainable projects and so on. What's your experience been?
Well, I don't think any one group of any sector of society is completely 100% on anything. That never happens. So I certainly wouldn't expect that of Indigenous Canada either. And there's diversity of views. When you see a First Nation development company or First Nations government directly invest in a project that is creating employment for their members and then getting the benefits of that investment, you're seeing a very happy First Nation, I think. I've met leaders and individuals from First Nations all across the country who, whether it's hydro projects or mining, which is the biggest employer of Indigenous Canadians, or oil and gas, similar scale engagement there, or forestry in BC. I mean, forestry, there's 120 First Nations out of the 206 First Nations in Canada that are involved in, 200 plus in British Columbia, I should say. So more than 120 of those are actively engaged in the forestry business. And they like it that way in terms of the benefits that come from it. I mean, it's challenging to be in these industries. It requires a lot of capital. It requires clearing a lot of regulatory hurdles so that government will let you do what you want to do. But if you can get all that right, then you've got the formula for building something.
Stewart, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Stewart Muir, Executive Director of the ResourceWorks Society. His website, resourceworks.com. Find him on Twitter at SJMuir. If you have any questions for Stewart or any of our other guests, we'll ask that question for you. If you send it to info@howstreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.